I think we are live. What's going on, my fellow business owners? Welcome to another video from the Loan Assassin. Got a really good training for you today. On this channel, we really try and focus on bringing you, as the business owner, the tools, training, and resources that you need to absolutely crush it in your business. And a big part of that is funding. And today I've got a special guest that's going to talk to us a lot about his process for funding and how he helps business owners not just get the funding that they need, but also get in a position to actually get the funding, right? He has a really cool process for that. So make sure you stick to the end. We're going to have some really, really good stuff when it comes to growing your business, getting funding, all of that good stuff. So I want to introduce Jose Sauceda from BDA Solutions. How you doing, my friend?
Good, man. How are you?
I'm doing good, man. I really appreciate you taking the time to be on here and do this training and share your expertise. I know you've been doing this for a while. You've got a really cool process. So let's just dive right into it. For those that don't know you, if you could just give us a little bit of what your experience is in this industry, background, and basically what do you do and who do you do it for?
Yeah, no, absolutely no problem. First and foremost, thank you for allowing me to speak to your audience. Really briefly, my background is in analytics. A couple of years ago, I was involved in real estate. I was doing some fix and flips. Got into actual building a rental portfolio, but then life happened and the market crash and all that other fun stuff. So
Yep.
I had to rethink my career, my life choices, and I was forced to hit the reset button on my life, but I didn't lose the itch to be a business owner. So kind of fast forward a little bit, about 2 years ago, I started a online business brokerage, and I formed BDA Solutions. BDA Solutions stands for Beta Delta Alpha, and I'm all about personal development. I at one point at my heaviest, I was at 265 pounds. And
Wow.
once I decided to lose weight, I embraced it's really a mindset. And that transformation is something that I want to help communicate to people. And that's what I want to help bring to people through the services and my business in general. So we all know what a beta is, in slang, it's a person, it's a man who is weak, who's passive. Delta is the difference or between two things or values. And obviously alpha is someone who has a dominant role or position in a particular sphere. So in that equation, my company is the delta. My clients are the ones that are transforming. I'm taking them from a beta stage to an alpha stage, leveraging the resources that we have to offer, which obviously I'll touch on shortly. Um, but yeah, so my company was formed, and I was thinking I was going to take on a very simple venture. I now have a network of lenders. Businesses need capital, and I just figured it'd be a very simple match to make.
Right.
However, there's a lot more to it than just capital.
Right.
There's SBA loans, there's BLOCs, there's term loans, there's MCA loans, equipment financing, etc. So it's an almost endless supply of products or services, and each of those products or services serves a different purpose, and it has their own set of underwriting criteria.
Right.
And it just kind of hit me really hard. I was to put a mathematical analogy to it. I was walking in thinking it was going to be simple arithmetic, and instead I got advanced algebra, which for
Mhm.
me isn't difficult, but it wasn't as clear cut as I thought it was going to be.
Right.
Um, so there's a lot of my time that was invested into really solving the problems that people came to me. Business owners have problems that they need solved, and when they come to me, it took a lot more time and effort to actually put something that was worth their while to actually go after. So since then, we've been able to successfully fund real estate investors, medical research companies, used car dealers, construction companies, restaurants, and a couple of other industries. However, with those success stories, there were several businesses that we couldn't help at that point in time.
Right.
And those are the businesses that I'm hoping to reach out to now.
Right.
So
And
through
that's
the
where your the delta portion of your company really comes
exactly.
in, where you're not kind of like what I alluded to earlier, you're not just providing funding, credit, and capital to business owners. You actually have a process. You're the delta, you're the in between that helps the business owner go from where they are to where they actually want to be. And if that
Right.
involves funding, which a lot of the times it does, you know, businesses need funding to grow. That's great, but there's a process. Like you said, it's not as black and white, not as simple as you thought it was going to be. Like, hey, just fill out a loan application and boom, you have funding. There's a process to it, and there's a journey that the business needs to go through, and that's where you come in as the delta. You provide the process to get them there.
Right,
Is
exactly.
that
And
fair?
that's very that sums it up really well. The Alpha program, the Alpha Profit program that we have, we take more of a consulting angle with our business owners. We help them improve their current situation, their current operations to generate more profit, not necessarily revenue, although they're we'll kind of go through that in a little bit. They are related, but profit, the bottom line is what we're going after. And hopefully some of those situations we can turn around to the point where they may not even have to borrow capital.
Right. Makes sense. Cool, man. That's awesome. I love it. Let's before we get into that process, let's if we could, based on your experience, let's go through some common reasons that businesses actually get denied for funding. Because I think if people have an again, it's not as simple as just filling out a loan
Right.
application. And why it's also really important to work with brokers, you know, loan brokers and companies like yours, because there's so many different types of financing as well. We'll talk about that. But what do you find are some of the most common reasons businesses get denied for funding, and what can they do to start preparing themselves to make sure they don't get denied? What are the
Yeah.
common reasons they get denied?
So to start, let's start at the beginning of that equation. That what are lenders looking at when you're actually applying for funding, right? There are really three areas that just about any lender, regardless of the type of funding you're going after, they're going to look at you from a credit perspective, a revenue perspective, and then also collateral. Now, ideally, you want to have all three of those boxes checked. Realistically, that's not what happens.
Right.
However, we as business loan brokers have the ability to do something for you if you have at least one of those options available at your disposal. Every situation is different, every lender is different, but generally speaking, to have the best chances for approval, you want to have at least a 680 personal FICO score, about $10,000 in gross business revenue, and whatever you have to pledge as collateral against a loan or an asset that you can liquidate,
And
like
that's
real
real
estate.
quick, Jose. That's per month. The 10,000, right?
10,000
The
per
ten
month,
thousand per
correct?
month gross. Okay.
Right, right. Now, it again, depending on the type of funding you're going after, that may not be even become a stopgap, but it definitely helps. It opens up the doors if you have that, available to you.
Sure.
Now, why people get denied is in the details, generally of two of those areas: credit and revenue. Um, Credit is more than just your FICO score. I've had clients that have been denied with 720 credit scores. Why? Because they only have one or two open credit accounts and they consider that thin credit,
Right.
or their utilization rates are above 30% on their existing debts.
Huh.
So the banks are going to see you as a risk because you're either not mature enough, you're not proven enough to take on more debt, or you're over leveraged and the bank doesn't think you can handle any more debt.
So credit profile is what we're talking
Right.
about, right?
Credit
You're
profile is key.
not just the credit score. It's the what makes up your credit.
What's behind that
It,
number?
right.
Exactly.
Okay. Makes
Okay.
sense.
The other one is revenue. Again, the kind of the magic number that you want to hit to start opening those doors to higher approval amounts is $10,000 a month in gross revenue. However, again, there's more to that number, or more to it than just the number. If you have inconsistent revenue, that's considered a red flag. So if you have high months and low months, banks will be hesitant to offer you anything. The other thing is if you have really high deposits and then really high expenses, again, a bank is going to look at you as a risk. You can't have $25,000 in gross deposits and then at the end of the month close your books with a $500 cash balance.
Right.
That tells the
Like,
bank
where did
that
all
you're
the money
not
go?
managing capital. Correct.
Right.
You know, so they're not going to add another expense to your existing cash flow because there's not enough there to cover their bases.
Right.
So with collateral, that's not really something that we can necessarily help you with because that's something that you build. It's an asset that you work towards. You know, so you go out, you buy a house, you buy a commercial building, you know, depending on the type of business or industry that you're in, you could have accounts receivable on your books that is considered collateral. That is something that you can liquidate. And that, you know, that's through invoice factoring. But again, it depends on the service provider and your industry. You may have minimums that you have to hit in order to be considered for invoice factoring. You know, sometimes that's as high as $100,000, and that's not easy to come by. But in summary, you have direct control over two of those three areas in order to be considered for funding, and that's credit and revenue. And that's where my company can really help accelerate performance.
Yeah, so that's what I wanted to kind of transition into next. And just to say, I mean, like just listening to all of that, it's crazy how much more is involved with getting financing and capital for your business. Like how many different factors are involved in just those three different things, right? So that's why it's any business owner I talk to that, you know, that needs funding or whatnot, it would behoove you to work with a loan brokerage company because they know about all these different things and they can guide you in the right direction. So, but yeah, let's dive into a little bit. I mean, you don't have to share all the secrets or whatnot, but maybe just a broad general overview. Now that we have this foundation, all right, so it's credit, revenue, collateral, and you guys focus mostly on the credit and revenue side of it. So walk me through a little bit of the process. Let's say a business owner is maybe just getting started. They need help with both credit and revenue. What does that process look like where you guys come in?
Yeah, so the fixing the credit side, that I'm gonna be flat out as transparent as I can. Fixing credit does take time. We work very closely with our credit partner and we monitor our clients' progress on a month-to-month basis. Our approach is very analytical. We take a look at the credit report and dispute any possible inaccurate information that could be bringing down your scores. And we take a look at your report for information as basic as how your name is reported, you know, your previous addresses, previous employers, all the way down to the accuracy of your payment history. And it is a pretty thorough process, so it does take time. On average, we see, you know, a decent turnaround in about 6 months. But within those 6 months, it's not a set it and forget it type program. We do need our clients to be actively participating with the process. So they'll be getting updates from the credit bureaus on information that we're disputing. And we need to see what that report or that feedback is, so that we know how to move forward and plan our next action steps.
Right. Okay. So that's the credit aspect. Is there anything so within the 6 months, I mean, let's say you have somebody that needs funding pretty quickly and maybe they can't wait for 6 months. Is there anything else that can be done in the credit aspect that would, I don't know, maybe speed the process up at all and get them to where they need to be? Or maybe it would just be a different type of loan that they get. What would that scenario look like?
Yeah, so it's yes to both. Well, I guess it also depends on, again, the credit profile that we're looking at. If they have thin credit, we are able to help utilize authorized accounts to help temporarily boost their credit scores, so that way we can go out and get them funding in a pretty short time frame.
While you're also working on the actual credit long term.
On the actual credit long term. Gotcha. And then also there are alternatives. You know, you can posit for some forms of funding. You can bring in a cosigner. or we can take a look at other avenues depending on your business financials that don't take credit into
Right.
account. So
Okay.
yes, there are other forms.
Gotcha. Cool. What about the revenue side? So we got, maybe a 6-month program. We're working on the credit. What is the, let's say you got a business again, they just starting out, maybe they're at 6,000 or like 6,000 a month, or like you said earlier, it's inconsistent. So they'll have a $20,000 month, but then they have a $3,000 month or whatever. What does the process look like for that?
So yeah, the revenue side, first and foremost, the very first thing we take a look at, especially for existing businesses, we take a look at their cash flow. If they have an active MCA loan, which is it's an acronym for Merchant Cash Advance, and they have at least $50,000 of active debt that is being paid off, we restructure those loans to eliminate the stress of daily repayments.
Right.
That immediately obviously helps free up cash flow.
Sure.
Plus, our service doesn't involve settlement. We actually pay the balances off in full, and the credit bureaus will show paid in full. You won't have to worry about credit things. If you're working with a debt settlement company, they pay less than what you actually owe, and that's where the negative
Right.
mark comes in. You don't have to worry about that with us. Because if you work with a debt settlement company, you're really setting yourself up. You're kicking the can down the road because you're going to need the credit repair because those
Right.
negative remarks are going to hit.
Right. So you're getting rid of the debt, but you're hammering your credit at the same time.
Exactly.
As well.
Exactly. Right. Right.
Yeah. Okay.
Now with
so
the actual,
so debt, like high interest debt, daily repayments like MCAs. That's one way to fix revenue. That I think is often overlooked. So what else?
So the other thing there's really within our consulting program, there are 12 different strategies that we can implement to generate higher profits. And these are profits without having to invest any additional money in marketing or advertising. We have a proprietary software that we help business owners analyze their existing situation, and not only that, but visualize how those 12 strategies are going to implement or impact their existing business. One of those strategies that we almost by default begin with is we analyze their profit and loss statement. Most business owners really don't take the time to really analyze the numbers behind their business, and that in essence is their overall financial performance. We take the time to help business owners analyze or maybe even discover how their business is actually performing. We help them compare that to their industry average, and that helps us to establish a baseline so that way we know how the other strategies are going to impact and affect your financials.
Right. Because you might just real quick, you might not even know what to work on without knowing the numbers. Like there could be these very solvable problems that you're blind to right now because business owners, they're focused on running their business every day, right? And so sometimes, and I fall into this trap sometimes as a business owner myself.
Yeah,
as long as I'm making money every month and I'm reaching those goals, then what do I care? Right. So it's easy to overlook that stuff, but the devil really is in the details. And when it comes to business, it's in the numbers. So you have to start with the numbers first. That way, I imagine that's a big part of where you guys come in and like you were saying, identifying how these 12 different strategies can work in your business, and also maybe which ones to prioritize as well.
That's the key right there. Yep. If you can't see it, you can't fix it.
Right.
Until we have that baseline to make a judgment call as to how to prioritize the implementation of those strategies, where we're really just kind of shooting at the wall and seeing what sticks.
Right.
And that's really not a good approach to have.
Do those real quick, the strategies, can they apply to just about any industry, or is there a specific industry that you typically work with?
So no, it can be applied to just about any industry. However, we do customize how we approach those 12 strategies, because although they can be, they do apply to every single industry, your specific business may need to address a particular strategy in a different manner. You know,
Right.
we might have to address, for example, a bundling package as opposed to developing a new marketing strategy. Your marketing strategy may be dead on, but you can implement a different bundling for your service or product
Right. Like a
that
different
you may
offer,
be overlooking. Exactly,
like a
exactly.
different initial offer. Right.
Right. So we customize that approach. We don't take a cookie cutter, a feel to it, and everybody follows the exact same order. No, we
Right.
we hone down and we actually sit down, analyze, and find out what you need, what you don't need, and what we can improve on.
I got you. Okay. Yeah. Fair enough. I
Okay.
like it.
Yeah, awesome. So the other thing that really a lot of business owners tend to overlook, that it really has tremendous effects throughout your business, is the development of a market dominating position. This is something that I struggled with as a business owner. And in all honesty, most business owners simply open their doors for business, but they don't really know who their target market is.
Hmm.
Now, why you're probably, well, why is this important? Like you said earlier, I'm making the money. What does it really matter? Because you're in business to solve someone else's problem. That is why your business exists. You are
Yeah.
trying to
And that's
solve
how you make
someone
money.
else's problem. That is how you provide the perceived value for the prospects that you're trying to market to. And if you don't have a message, you don't have a business. If you aren't solving a specific problem, you really aren't solving anyone's problem, because you
Hmm.
can't be everything to everyone. That causes you literally to be spread too thin. Then your resources are going to be spread too thin, because you're always investing in materials and hardware and education in order to try to solve the problem of every single person you come across. You're endlessly chasing your own tail. So, for example, if you're a photographer and you're just starting up your business, are you going to take on every person that has a need for some sort of photography? Are you going to develop a studio? Are you going to develop or go out and purchase cameras for outside photo shoots, cameras and equipment for events like weddings? What about the printing and the development of those images? Will the quality of the photo paper and the ink be different for a wedding portrait as opposed to a nature shot? A
Right.
nature shot that someone's just going to hang up for decor. If you invest in all of these resources and hardware and equipment to have all of those bases covered, your break even point is going to be sky high.
Way too
You're
high.
never going to
Yeah.
make a profit. However, on the other end, if you don't, you're literally just passing the buck on to your client. Or is your client, when they come to you, are they going to overpay for a photo because the equipment and the print is going to be at a high level, and they don't really need that? Or are they going to settle for a lower quality, and you're attacking the cost angle to it? Either way, you're not really addressing someone's problem or need. So
Yeah.
your perceived value is tarnished, and at the end of the day, you don't make sales. And
Right.
that's the type of business that's going to become a casualty to the marketplace. And they're just going to end up as another statistic
Yeah.
for a business that doesn't survive.
It's just you're trying to help too many people. The
You're
photography
trying to
is
please
actually,
everyone.
yeah, the photography example is actually a good one. I have a buddy of mine that does photography. He started out with sports photography, and then, well, I guess this is kind of like a niche within a niche, right? Because he didn't do any of the wedding stuff or portrait stuff, none of that. It was all sports, and then he eventually just focused on motorcycles, racing motorcycles. I mean, when you look at his work, it's just unbelievable. But that's the only thing that he did. Like, again, he
Exactly.
started at like football. Like, I'm here in Jacksonville, Florida, and he started with, he got a position somehow photographing the Jacksonville Jaguars games and stuff like that. But then
Oh,
eventually
nice.
moved into motorcycles. But the point is, yeah, if you focus on too many things, you don't actually get anything done. At least that's
Correct.
truly worthwhile. and doesn't solve the problem to its maximum capacity, right? And also positioning yourself as an expert in your particular field for one particular part of your field, right? It's just it makes a huge difference when it comes to generating leads for your business, getting more customers. Makes it a lot easier to close deals, in my experience, right? So I think that's that's definitely an important point. What was the term that you called market domination? What was
market dominating position?
Okay, so is that one of the first things that you guys focus on?
That really is one of the profit and loss analysis and the positioning is the two areas that we almost 100% of the time focus on for all of our clients.
Right.
Because
real quick, do you find that a lot of clients don't have that in place?
There, surprisingly, yes. The majority of people either have an idea of what it should be, but again, they get caught up in the details of running the business from a day-to-day basis that they don't have the time to really dedicate and refine that message. And honestly, it has a domino effect. It trickles down through how you actually run your business, because again, you're absorbing costs to try to please everyone as opposed to just one problem, one need.
Makes sense. Awesome, man. That's good stuff. I want to transition into some different types of financing that business owners that you typically maybe work with clients, because we're talking about business owners that have been denied for funding, or maybe they're just getting started, so they can't go down to the bank and get the funding and capital that they want. So obviously you have this really good process that you take people through, but it's going to take some time. So what are some common types of financing that you can help business owners get, maybe in the interim while you're working on this, maybe working towards equipment financing or an SBA loan or something like that? What are the common types of financing that you can typically help business owners get after they've been denied?
So yeah, that really depends again on the type of funding that you originally applied for, and why you were denied. So if you were going in, for example, the SBA loan, you can be denied for the SBA loan, but we have lenders that offer other term loans that have different underwriting criteria that the SBA doesn't. So, we can possibly take you down that route. It honestly all just kind of boils back down to the three components that we spoke about earlier that lenders analyze to review your file. If you have good credit, but maybe you don't have enough time in business, or, we can go out and obtain business credit lines for you. Those business credit lines need a strong credit approval, but the debt itself doesn't report to the actual Social Security number. So it's a really good resource for startup businesses. If you have bad credit and no collateral, but you have a revenue generating business, you can still go out and obtain, for example, an MCA loan. But again, those MCA loans, I hesitate to offer to my clients because of how expensive they can be.
Right. It's got to be really short term if they're going to do it.
Now, especially if they don't have a plan on how to use those funds.
Right.
And if that plan does not result in additional income being produced, I tend to shy away from those types of loans.
Right.
Especially if they're using those loans to cover, payroll expenses or, some other type of overhead. They're really just setting themselves up for failure.
Right.
These loans, in my humble opinion, should only be used as investment capital as opposed to expense coverage.
And a last resort, if possible.
Right.
And you've got to make sure you're using it to the point where you're going to get a return on that investment, because it will end up being a massive investment that you take on because of how expensive it is. So
exactly. And that's the reason why those loans are so deadly for business owners, is because of how those loans originate. Again, it pivots back to the reason why a P&L analysis is so important, because we go through that with our clients. And as a simple explanation, on a P&L statement, you've got your top line, you've got your revenue, right? Then you subtract your cost of goods sold, which is typically labor and material that's directly associated with the delivery of your product or service. From that number, you subtract your fixed cost, which then leaves you your business profit. The fixed costs are, your insurance, your rent, and all of the other kind of overhead costs is another term for that category of expenses. And that bottom line number is your business profit. Now, on average, most companies see a 30% gross profit ratio and a 10% net profit ratio. So really put that into perspective. If your company is generating $500,000 in gross revenue, which to the average business owner is just like, holy crap, $500,000 a year, I'm making it. Yeah. But the business is only making that 10% net profit margin, that's only $50,000 in net profit.
That's crazy.
So it's mind-boggling as to how those numbers actually boil down. Now, going back to the MCA, if the lenders are looking at your top line, right, and that means that you're going to have to pay back more than what was lent out to you. So that means you're going to have less revenue available to you to pay off your COGS, and then even less revenue to pay your overhead expenses, which obviously is going to translate to smaller profit margins. So if a $500,000 a year company gets a $30,000 MCA loan and has a $45,000 payback, that means you literally went from $50,000 to $35,000 a year profit. Like $35,000 is almost poverty level, and your business has to generate $500,000 to get $35,000 to hold on to. That's insane.
That's a very expensive and time-intensive job.
Right, and not only that, but take a look at the stress that you're going to get to make sure that your cash flow is sufficient enough to cover those daily withdrawals.
Yeah.
So the business owner just literally traded their dream of working for themselves, and now they're working for their lenders to make sure that those balances are covered. There's a saying that I came across recently, and I can't remember the source of it, but it hit me like a ton of bricks, and it said, revenue feeds your ego, profit feeds your family.
Profit feeds your what? You cut out a little bit.
Profit feeds your family.
I like that.
So yeah.
Revenue feeds your ego. Revenue feeds your ego. Profit feeds your family.
Profit feeds your family.
I really like that.
So that's why we, from the consulting angle, focus on profit. Because that is where the business owner is going to get the most benefit, not the revenue. That's where the lenders look at.
Right. Makes sense. That's why, man, when I see these online companies, apply online for, a $200,000 business loan or whatnot, it's like, unless you really know what you're going to do with that, what that is going to do to the business, like, I don't think it's a smart move. You have to have a plan in place for, okay, what do you need this funding for? What are you going to do with it? What is the return on investment going to be? How is it going to actually help you grow your business versus, like what you said, just covering payroll? Now, some forms of capital and funding are good for that. I'm not saying not to do that, but the danger comes in not having a plan in place.
Right.
Exactly. I spoke to somebody the other day that was working with a client, had 7 stacked merchant cash advances. I think it was like $250,000, and it's just crazy. And
wow.
You look at that, and there's no plan. All you're doing is just taking money to pay off the money that you got earlier, right? So it's you guys, you have to have a plan in place with this. So what I want to finish up with real quick, Jose, we've talked a lot about getting lender ready, kind of with talking about credit, revenue, collateral. But let's leave our audience with some practical things that they could do right now, assuming that they're going to start to take this path on their own or whatnot, what are some really basic things that that business owners can do right now to maybe start improving their credit, whether that's just getting their credit, starting with a credit report or whatnot? What are what's like one or two basic things they can start to do to get their revenue under control?
So to become lender ready, this is it's a topic that I can honestly spend a couple of hours going over with someone. But the very first thing that I would suggest and even beg someone, a business owner, to do is to make sure that their personal credit is strong. Period. Like this isn't necessarily a commercial for my service. Regardless of who you choose to work with, just get it done. I've never ever met anyone who said, "I wish I didn't have good credit."
Right.
It's always the best resource to fall back on as a worst case scenario. It's a great tool to be able to pull out and honestly access capital at literally at 0% to be able to get your business to scale or to cover an emergency expense, what have you.
Right.
It's never a bad idea to have good credit. Another thing that I would suggest business owners to do, especially those that may be thinking about starting a business or maybe are in the early stages of their business, is that every entity should have a commercial address tied to as a registered address for their business. Most new business owners just hurry up and they register their residential address, their home address, as their business address. And this should be reconsidered for two reasons. Number one, first and foremost, safety. You don't want people looking up your business and now knowing where you live. That's
Right.
just not safe. But the other thing, it really does affect lending. There are some lenders, some of the strongest lenders that I have in my network, that will flat out refuse to fund home-based businesses, regardless of your credit, regardless of your revenue. So as you're working your way up to building relationship with lenders, the more sophisticated ones are going to require that you have a commercial address tied to your business. Ideally, you would like for it to be a brick and mortar, but I mean, obviously you want to, especially at the beginning, you want to kind of hold down your starting costs as much as possible. So I mean, go out and get a virtual office.
Or like UPS, right? They have the mailboxes that you can rent, right?
Yep.
And you can use their address.
Yeah, perfect. Or even better yet, if you know a business owner, I mean, shoot, let's say that they're an auto mechanic, they have obviously a brick and mortar store. You can work something out with them and just say, "Hey, dude, can I borrow your commercial address and just create Suite 1 or Suite A?" And that's a unique commercial address that will not exist anywhere else. A lender will not think twice about lending to someone that is utilizing an already existing commercial
That's
address.
interesting. I didn't know that made such a big difference. Now, if you have you ever run into issues where somebody does that and like maybe the lenders just don't look at it that much, but like if I'm starting a company and I was going to use my personal address, but then I go to an auto repair shop, but then they find out that I'm not an auto repair shop. Does it ever really go that far? And if it does it really make a difference? Do they care? Because at the end of the day, again, they're looking at your credit, your revenue, not
exactly.
Not
And the fact that you are using the address, but you are isolating that you are Suite A or Suite 1. You can just say, "Hey, I've got an office in the back of that shop."
Yeah, where do they care,
not
right?
The shop. Exactly.
Okay, that makes sense.
But you have a commercial address.
Huh. Okay. No, that's good. I did not know that, and I'm guilty of that. I used my personal address for a long time.
We all are. Yep.
I don't anymore, but yeah, I use my personal address, not even really thinking about it. And it's crazy. Like sometimes these basic things, man, these basic things that we overlook as business owners every single day, all these things add up. over time,
Yeah,
whether
and
it's growing or getting
that
funding or whatever it is.
and it may not affect you tomorrow, or it may not affect you today, but the day is going to kind of it's on the horizon.
Sure.
There's gonna come a time where you may scroll, you may scale, you may grow, and you may need that top tier lender, and
Right.
you've got your revenue in check, you've got your credit in check, and now all of a sudden, oh crap, I've got this
Hmm.
residential address, and you just shot
Right.
yourself in the foot.
That's crazy.
So
Something so small that
right.
that can crush that deal. And yeah, I mean, and a lot of this is really just about setting yourself up for success over the long run. So like you said,
Exactly.
when you
That's
get
all
to the
it is.
point where you need to get that capital, do we really want this one little thing to keep
To
that from
stop you.
happening?
Yo,
No.
yo,
So
yo.
I love that, man. Well, right on. This has been some really good stuff. We're hitting that 40-minute mark, so I'd like to go ahead and wrap up. I think we you've dropped some really awesome knowledge bombs, man. You've shared some really good stuff. Uh, how can people learn more about you if this message has resonated with them and they want to reach out, have a conversation, potentially work with you, have you come on and work in their business and help them? What's the best way to do that?
So yeah, the best way to reach out to me is through our website. That website is
Which I have scrolling at the bottom there.
bdaconsulting.help. We do a free analysis for anyone that wants to potentially work with us. Again, we're going to access that proprietary software to not only analyze your business, but also help you visualize the impacts that we're going to have. And if it makes sense for us to work together, awesome. We'll work with you to help you scale, maybe even just tighten the bolts on your existing operations. Um, in my humble opinion, most businesses think that they need to borrow capital, but they aren't necessarily ready for
Mm,
that capital. They don't have control of their operating numbers, their marketing message, their value proposition, their
right.
SOPs. So we help businesses develop a keen understanding of not only their business financials, but also their position in the open market. We're helping them forge a strong identity so that they can attract more customers and operate in a more effective manner. Our goal isn't to sell you on a particular loan product, but rather, again, kind of tighten the screws on your existing business, let it work more efficiently for you, the business owner. Then once you're firing on all cylinders, your revenue is up and going, your profit is at a higher margin than the rest of your industry, your personal credit is up to par, you'll be in much better shape to approach a bank or a lender.
Right.
And at that point, you may not, honestly, you may not even need it.
Right.
But it's a good feeling to know it's a good feeling to know that can't you can, but don't have to approach a lender,
Right.
as opposed to you having to approach a lender, but you can't.
Right.
So most businesses, we can honestly help them find anywhere from $50 to $100,000 in lost or forgot overlooked profits.
That's
So on the
crazy.
website, you can set up a call with me. We can sit down, access the software, visualize the impact, and help you become a much more efficient business owner, and your business will grow and scale at a much faster rate than you would have if you were trying to take on that endeavor on your own.
I love it. Awesome, man. Well, definitely take advantage of that, guys. Head over to Jose's website, get a free analysis. I mean, what's the worst thing that can happen, right?
Yeah,
You learn
yeah,
2 or 3 different things that you overlooked that could add a lot of money, a lot of profit to your bottom line. Like that's the worst case scenario. So
right,
definitely
right.
check that out. I'll have a link down below in the description, or it's on the screen, however you want to access it. Jose, really appreciate your time, man. Really appreciate you
Hey,
sharing your
thank you, brother.
expertise.
I
Yeah,
appreciate
and
it. Yep.
yeah, I hope we can have you on the channel again soon.
I look forward to it, man.
All right, brother.
Thank you.
Well, take care. Yep, take care. We'll talk soon.
All right, bro.
All right, bye.